It's been a tough year for Indian markets. Global uncertainty, currency pressure, and returns that fail to excite many investors. Now, the crucial question as we look ahead is, can Indian equities bounce back in 2026? And can the Sensex really move towards 1 lakh? Christopher Wood, Global Head of Equity Strategy at Jefferies, believes it's possible, but only if a few key pieces fall into place. Now, before we break down what 2026 could look like for Indian investors, let's take a quick break. First, let's rewind a bit. Globally, 2025 belonged to one theme: artificial intelligence, especially in the United States, where AI-linked capital spending drove markets higher. But the catch is, despite strong absolute gains, US markets actually lagged on a relative basis. Emerging markets in parts of Asia did better. India, however, stood out, and not in a good way. It delivered one of its weakest relative performances compared to Asia and other emerging markets in years. One major reason was the currency. The rupee slipped far more than expected. Wood says he had assumed the rupee wouldn't weaken beyond 89 to the dollar. That 89 would act as a floor. Once that level broke, he says, it began to feel destabilizing. And that weaker currency played a big role in India's underperformance. Despite all that, there is a silver lining. India's relative performance in 2026 may depend less on domestic factors and more on the global AI trade. Wood believes that if AI-linked markets like South Korea, Taiwan, and China continue to dominate, India could lag again. But if investors begin demanding real earnings visibility from AI-heavy bets, the tide could turn. That's when India benefits. Wood calls India the reverse AI trade, a hedge for investors if the AI boom begins to cool. This is where optimism returns. If India sees a cyclical pickup, better earnings, improving growth, and the impact of monetary easing, then another 10 to 15% upside is possible. That kind of move would place the Sensex close to Wood's long-term target of 1 lakh. It's not guaranteed though, but achievable if earnings do the heavy lifting. And lastly, Wood remains bullish on gold, especially gold mining stocks. Despite strong gains, he believes the long-term backdrop stays supportive. India's large household gold holdings, he adds, are a hidden strength. As for AI, the risk is simple. At some point, investors will ask where real returns are coming from. That moment could reshape global capital flows. So, to sum it up, Wood believes that if the rupee stabilizes and growth improves, India can still deliver respectable returns. And yes, a Sensex moving towards 1 lakh is not out of reach, but the path to it won't be smooth. If you like this explainer, follow Business Standard for more such market explainers.